You are currently standing in the center of the 2026 market void, surrounded by a storm of flickering data. You see the candles on your NQ or EASE chart jumping. You see the tape scrolling at a speed that makes your heart rate spike. To your uncalibrated eyes, this looks like opportunity. You feel the dopamine drip in your system, the small self telling you that if you don't click execute right now, the move will leave without you. You are being lied to. What you are witnessing is not opportunity, it is toxic volatility. It is the market screaming in a dozen conflicting directions at once, a chaotic ink blot of red and green that signifies nothing but the consumption of retail liquidity. Most traders enter here because they are addicted to the noise. They confuse movement with intent. They think that because the price is moving 50 points in 10 seconds, they should be in the arena. But the Sentinel knows better. We understand that in the focus war, confusion is the most expensive tax you can pay. While the retail crowd is busy trying to catch red lightning, in a paper bottle, the institutional predators are sitting in the shadows, waiting for the noise to burn you out. You are not trading. You are participating in a biomechanical failure. It's time to perform a system-wide override and install the timing protocol. To master the timing protocol, we must first perform a clinical autopsy on volatility. In our sepia-toned landscape, volatility is characterized by high entropy. It is a state where the market has no clear structural bias. You see long wicks, spectral red claws reaching above and below the candle bodies. These wicks are not random. They are surgical strikes designed to trigger stop losses and harvest the hope of the amateur operator. Volatility is a mean-reverting environment disguised as a trend. The price spikes up, induces the hope subroutine, and then immediately collapses to take out the buyers. Then it spikes down, induces the panic subroutine, and reverses to take out the sellers. If you are clicking buttons in this environment, you are the fuel. You are paying the latency tax with every heartbeat. Think about your neurochemistry in these moments. The jagged movement of the price causes a 68% spike in your cortisol levels. Your prefrontal cortex, the part of your brain that understands your trading plan, begins to shut down. You move into a fight or flight state. You aren't analyzing data anymore, you are reacting to ghosts. The timing protocol exists to prevent this biological crash. We define volatility as noise. And in the cognitive fortress, we do not trade noise. We wait for the signal to turn cyan. Now, contrast this with velocity. If volatility is a hurricane in a bathtub, velocity is a flood in an open field. It is clinical. It is silent. It is the cyan arrow. Velocity occurs when the institutional algorithms have finished their harvest. The messy work of collecting retail liquidity is over. Now the big money is moving price from point A to point B with maximum efficiency and minimum retracement. You recognize velocity by the body-to-wick ratio. The candles become full-bodied. The noise disappears. The wicks become short or non-existent as the price moves with a singular high-frequency intent. There is no screaming here, only the hum of a superior logic machine. Velocity is where the real capital is extracted from the market. In the timing protocol, we do not chase velocity. Chasing is a retail behavior driven by the small self and the fear of missing out. Instead, the Sentinel identifies the velocity threshold. We look for the moment the market transitions from the sepia scribble of indecision into a clean, geometric line of intent. We are looking for price displacement, a violent, one-sided move that leaves a gap in the architecture. This gap is the predator's footprint. We wait for the price to return to this footprint and then we execute. We aren't guessing. We are synchronized with the institutional motherboard. To bridge the gap between theory and execution, we require a mechanical filter. We cannot trust our eyes because our eyes are wired to see patterns even where they don't exist. We use the ATR, average true range, as our clinical diagnostic tool. In a high-volatility environment, the ATR is high, but the price velocity is low. This is the red zone. The market is moving a lot, but it isn't going anywhere. It is a treadmill of ruin. We sit in the fortress. We watch the tape, but we do not touch the mouse. We let the eternal students and the casual success hunters burn their accounts to the ground. When the ATR begins to stabilize while the price action shows sustained displacement, the logic gate opens. This is the cyan zone. The timing protocol tells us that the noise tax has been paid by others, and the path is now clear for a high-probability execution. We look for the just-in-time entry. We aren't looking for a perfect setup. We are looking for the moment where the latency between our intention and the market's move is at its absolute minimum. This requires a total format of your emotional identity. You must learn to be bored by volatility and energized by the clinical silence of velocity. If the market is jumping and screaming, your hand stays off the mouse. You are a ghost in the machine until the math turns in your favor. The most difficult technical challenge of the timing protocol isn't the indicators, it's the silence. In the 2026 economy, silence is a rare resource. You are conditioned to be busy. You feel that if you sit in front of your screens for 4 hours and don't take a trade, you have failed. This is the identity bug. The professional operator knows that doing nothing is often the most profitable trade of the day. Every trade you don't take in a high volatility, low velocity environment is money saved. It is capital that remains in your fortress, ready to be deployed when the cyan arrow appears. You must build a skill moat around your patience. While everyone else is scalping the noise and losing their execution capacity, you are preserving your mental capital. You are auditing the data. You are watching the institutional footprint. You are waiting for the moment when the mirror split shows you a clear path from the sepia struggle into clinical sovereignty. If you cannot master the wait, you cannot master the trade. The predators rely on your boredom. They rely on you clicking a button just to see what happens. That click is a breach in your cognitive security. Seal the breach. Initiate the silence protocol. Become the sentinel that the predators cannot find. The choice in the 2026 void is binary. Stay in the net and pay the latency tax until you are bankrupt of potential, or perform the system-wide override and claim your sovereignty. If you are ready to let the struggling stickman die and perform a biological format of your identity, you need the blueprints. Initiate the timing protocol. Stop reacting to the noise. Start performing in the silence. Treat your trading like the professional business it deserves to be.